In step 3 of the 6-step process, we identified an entry zone and a target zone on the lower time frame. The last piece of step 3 is to evaluate the profit zone. In this lesson, we're going to talk about what the profit zone is and how to evaluate it as an odds enhancer. Profit zone is simply the distance between the entry zone, where you're looking to open a trade, and the opposing target zone, which is where you're looking to take your profits. A large profit zone increases the potential reward to risk for the opportunity, and in addition, a large profit zone provides a higher probability that price will turn at the entry zone. In this way, the profit zone is an odds enhancer. Sometimes you may hear the profit zone referred to as profit margin. They are one and the same. Let's look at a visual of how to measure the profit zone. In the lower left-hand corner of the screen, we have a demand zone as the entry zone with the proximal line at 62 and the distal line at 61. This is a unit of 1. The nearest opposing supply zone, which is the target, sits at 67. The distance between these two zones is 5. Putting that into a ratio, we have a 5-to-1 reward to risk ratio. Let's look at scoring the profit zone as an odds enhancer. The profit zone of an opportunity is measured on the lower time frame. We should ask ourselves, how far is the opposing zone? If it is far, this increases probability, and if it's not far, this takes away from the probability. In the first column on the left, we see that each setup has a profit zone of 5-to-1 or greater. This is the best case scenario as it provides great reward to risk as well as higher probability of meeting our targets. An opportunity with a profit zone equal to or greater than 5-to-1 gets 2 points. In the second column, each profit zone has a setup of 3-to-1 or greater. While 3-to-1 profit zone is good, it's not as good as 5-to-1, obviously. So for opportunities with a profit zone of at least 3-to-1, the score is 1 point. Finally, in the third column, if a setup has a profit zone of less than 3-to-1, it scores 0 points. Recall that a large profit zone allows for higher profit potential on the trade. Therefore, if an opportunity has a profit zone of less than 3-to-1, our initial target is limited to less than 3-to-1. At that point, we need to consider if the trade is worth it or not. The key here is to remember that the larger the profit zone, the greater the probability of reaching your initial target. Looking back at our working example, we have our quality demand zone. You can see it there on the left side of the screen. Staying on the same time frame, the lower time frame, we identified the nearest opposing supply zone. Notice the profit zone is greater than 5-to-1, which means this zone gets the full 2 points. Let's add that to our scorecard. 2 points for the profit zone brings the total odds enhancer score for this zone to a 10 out of 10 possible points. Now you've learned all 6 odds enhancers. The odds enhancers can be categorized into zone structure of strength, time, and freshness, context odds enhancers of trend and curve, and finally the odds enhancer for reward to risk, the profit zone. The 6 odds enhancers together as a whole indicate the probability of the overall trade setup. So in this lesson, we explained what the profit zone is, how to assess it, and how to score it as an odds enhancer in order to help determine your potential reward to risk for your trades. Before you move on, be sure to understand how the profit zone measures the distance between the entry zone and the target zone. Practice identifying entry and target zones to determine the profit zone. Be sure to understand how to score the profit zone as an odds enhancer. Hope to see you in the next video.